3, go.
What should investors do? You know, we got the fastest inflation in 31 years. Should investors be dancing in the street? Should they be running to the woods? What should they do? Stay tuned and find out. You know, we've been seeing the stock market for the last couple months has just been roaring forward. And the stock market continues to just churn no matter what kind of bad news that's coming out. So we're going to talk today about what's been in the news for the past couple weeks and what investors should be doing. And you know, one of the things I've been talking to you about for the last probably 6 months is transitory inflation. You know, the Federal Reserve says that the inflation is going to be transitory, but in the last 3 months or so, Wall Street has come out and said, oh no, we're thinking it's not going to be short term, but it's going to be long term. But you know, the Federal Reserve started tampering this month and cutting back on how much bonds that they're buying. And I'm going to go through some articles that's been hitting the news over the last 2 to 3 weeks. And we're going to look at this and really kind of hone down where the market's going, what's happening in the market, so you'll know exactly what you need to do with your portfolio. The first article I want to talk to you about is actually about 2 weeks old, and it says the Fed to begin tapering its assets. This is from Fox News. Economists say it will send interest rates higher. You know, based on this article, what has happened when the Fed met is they're going to reduce bond purchases by $15 billion per month. You know, the current level is at $120 billion. So what they expect within the next 6 to 8 months by June of 2022 is that they're going to wipe out all these bond repurchases. We believe today here at Christian Values that the market has yet to factor in the mandate by President Joe Biden. And then what's that going to happen? What that would actually do to the market? You know, when you have 100,000 truck drivers says, I'm not going to be driving trucks any longer. When you have healthcare professionals says, I'm no longer going to go to work. Airline pilots says, I'm no longer going to fly. What long-term effects will that have on the market? And I don't believe as of today the market has yet to factor in that. So this right here, this article from Fox News is telling us that tapering has actually begun, and they're going to cut back on their bond repurchases by $15 billion per month. Now let's look at the next article that came out. This was actually an older article. This was dated February the 2nd. And what it says is the Fed is expected to announce an end to bond buying program. Investors seeks clue on the first hike. And they're talking about a rate hike. What I wanted to show you in this article, if you scroll down in this article right down a little bit, what you're going to see is that what BlackRock had to say about all this. Here it is right here in this part of the article, and this is what it says. My sense is the word transitory has left the station. I would be shocked if we heard that word come up again, says Rock Ryder, Chief Investment Officer of Global Fixed Income at BlackRock. He said it is important to watch how the Federal addresses employment in the other half of its dual mandate. Transitory inflation has left the building. What we find out, if you go to our next article that's come out, this is in the New York Times, is that inflation is the fastest it's been in over 31 years. So what this is doing, in a nutshell, is that this is putting pressure on the Democrats. It's putting pressure on President Joe Biden, and it's also putting pressure on the Federal Reserve. There's even been economists that's come out and said the Federal Reserve should have acted 6 or 8 months ago. They should have done something about this runaway inflation that we're seeing happening. The highest it's been in 31 years. But you know what is taking place in the stock market? The stock market is ignoring all this news. Let's look at this article that come out from MarketWatch. It says, behind the highest U.S. inflation rate in 31 years lurks a fear that the Federal Reserve has lost control of consumer prices. Have you noticed interest rates going, gas prices going up? Have you noticed prices of food going up? I believe everybody's going to the restaurant. They realize that prices have continued to go up. Now let me read what this says here. It says the Fed has this is by Stifel chief economist Lindsay Peza, and she said the Fed has absolutely lost control of inflation and inflation expectations, or at least it appears that way. Policymakers arguably should have moved a lot sooner to pull back on the easy policy earlier this year. Now, what is being said here is that the Fed should have reacted months and months ago. They kept telling people this is transitory, this is short term, it's going to go away by the end of the year. And what we're seeing reported in October, the highest inflation in 31 years. But the stock market keeps chugging along. It's not paying it a lot of attention. Let's go to our next article. And this is why gold isn't protecting you from runaway inflation at this time. Now I'm going to show you a chart on gold, and here's a chart of gold and gold prices. What you'll see on this chart is that if you go back to June, gold started on its way down. June the 1st, 2021. And this is the way all this works. When inflation and interest rates take place, interest rates start going up. What happens to the dollar? The dollar will strengthen, and gold prices, precious metals will come down. So what has happened in June is that all this has taken place and gold has started easing down. But what you would think, if you start having continued inflation for a number of months, gold then will turn around and start going back up. And this might be what we have witnessed right here. And you see the date on this is right around November the 4th of this year, where it broke out of this downward spiral cycle here and is actually turned up from $1,793 an ounce to where it closed at today at $1,846. But gold has not been protecting us against runaway inflation. And what this article is basically saying is that this gold, they believe, eventually will start pairing and start going up, but right now it hasn't done that. They think we haven't had inflation long enough for that to take place. Here's another article, is that the Feds are now saying that tapering may not be enough. $15 billion a month may not be enough, and they may have to increase that amount to help cause inflation to subside. The problem with this, if they increase the tapering, what happens is interest rates will go up even quicker. which is bad news for the stock market. The stock market will compete with interest-bearing notes, and they typically, when that happens, you'll start seeing money leave the stock market, start going into more interest-bearing notes, and stock market will start going downward. Here's another article I want you to look at that came out. This article here was actually put out by Goldman Sachs. Goldman Sachs stated, and this article was actually done the 16th, was done this week. They're saying they believe that the stock market will continue the bull market run even into 2021. See, there's a lot of experts saying that they believe that the market will contract in 2022. So Goldman Sachs is kind of bucking that, and they're believing that the S&P 500 will actually increase 9% to 5,100 by the end of 2022. What's strange about this article is what actually Goldman Sachs said today. Now, this was actually also the 17th. It says, Goldman CEO Solomon, greed is outpacing fear in the financial markets. Let me explain why that is important today. When fear takes place in the stock market, you'll have that fear in the market cycle. Usually the stock market will continue to rise. And when investors start getting really enthusiastic about what's taking place in the market, what happens, they start overbuying. What happens then usually is when you have a market correction. So what he is saying, basically almost on the same day, is that they're believing the market will increase to 5,100 by the end of next year, but they're also saying that greed is outpacing fear now, so which it means we've changed a different place in the market cycle. So a lot of times that will point to a market top. So what should you do with your investments today? I believe you need to keep them invested, but you better keep your eye on your 401ks, your retirement plans, your money that you have invested in your individual accounts. And as the Fed meets in December and they start talking about raising interest rates next year, you need to take a closer look how the market reacts and make sure that you're going to be very cautious and not be greedy. And if it means somewhere down the road next year that you start taking some money off the table, that may be a smart move. But until next time, God bless you.